This bear market is triggered by the old money exiting. The long-term holders are selling since Bitcoin hit 110K in July, and that selling has accelerated. Have a look at the revived active supply on a weekly time frame. We do see a bit of a spike here, but nothing that's showing a long-term trend. Have a look at the last 30 days. Now the spike is already a bit more significant. Have a look at the last 90 days. Now we do see that when we look at the last 3 months, how much of the old supply got revived. We are at a peak we haven't seen very often. We could even argue that this is an all-time high in terms of revived supply if we take the last 180 days as a reference point. The selling that has been going on by the OG crypto investors in the last 6 months is unprecedented. This is not just something that's a bit of a short-term fluke. This is a trend that has been going on for a while. A trend that seems to not turn around, even on the short term. Now we have to wonder. Now that of course then begs the question, why are the long-term holders selling? What has changed so much over the years that suddenly over the last 6 months they're selling off more and more of their Bitcoin? Of course we can't look into everybody's head, and of course there might be multiple reasons. But one probably very strong reason is the narrative of the 4-year cycle. Sometimes when a story is strong enough, it becomes a self-fulfilling prophecy. What we see over here, that's the Bitcoin return on investment after the halving. After the very first halving cycle, Bitcoin made a 100x return. The second halving cycle still saw a 30x return. The third halving cycle gave us an 8x, and this time it's comparatively modest, a 2x. If we exclude the very first cycle, we can see that even though the magnitudes of returns were very different, the timing when we saw the peak after the halving is relatively constant. And that might be the reason why the long-term holders are so aggressively selling. At least it might be a leading reason. If that's really everything that's going on here, then we can simply sell today and come back in a year and buy back for lower prices. Unfortunately, I believe it's not that simple. Because have a look at this. This is the number of wallet addresses with at least 0.1 Bitcoin. So we could imagine this is the retail investor that does self-custody, not using ETFs, etc. And the number of those wallets tended to constantly increase up until September of 2023. So for the last 2 years, roughly, we haven't seen the number of retail investors going up anymore. When we take as a threshold 0.01 BTC, it seems like the top is at a very similar point in time. So it's not necessarily the threshold itself that makes the timing here, at least for the smaller amounts. It's the same for 0.01 BTC. And so no matter what threshold we look at, we see a very similar time at when the growth has actually stopped. It only stopped a bit earlier for the larger thresholds, say 10 BTC or 100 BTC, etc., because there aren't that many people that want to hold more than $1 million under a single wallet. So this does make sense that this tops out earlier, but everything that could be considered retail, 1 BTC, 0.1 and below, it all tops out roughly 2 years ago. So there is something structurally going on that is going beyond this 4-year cycle theory. And so maybe the long-term holder selling is not just timing the 4-year cycle. Maybe there's really something going on that's historic, because the revived supply in the last half year has also seen a historic peak. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. Here is the potential danger. This is Bitcoin relative to the Nasdaq 100. How much is Bitcoin outperforming technology stocks? In the first cycles, it was very clear that Bitcoin had more performance than the average investment. But over the recent 6 to 7 years, the cycle tops didn't really show that much more outperformance versus technology stocks. If Bitcoin was to fall just a little bit more, we might have seen zero outperformance versus technology stocks when it already hit 20K in the year 2017. If this lack of outperformance is the reason why the long-term holders are selling, then that's no good, because that would imply that this peak could peak much higher and that this selling could go on for much longer and that this selling is actually structural and again, not just a matter of timing the market. For the short to medium term, it doesn't really matter what the reason for the selling is. If it's the lack of outperformance or if it's market timing, because independent of the reason, the selling is very likely going to continue until we are at an overall equilibrium price again, until we hit the realized price, until the average market participant is in losses again. This is usually when we turned around at the end of a bear market. Currently, that level is at $56,000. And that's, I think, a very good reference point. This is where it might make sense to put in first purchase orders again. If you want to be a bit more cautious, you could also wait for the long-term holder realized price, because you also fell below that during every bear market. That long-term holder realized price is at 36,900 only. So there's still a long way to go. If we enter a bear market, the pain can be very severe. We can go to prices that most people do not yet anticipate. Most people think we'll never hit those lows again. But a lot of people also never thought that we'd hit 16K when we were at 72K. The question is always about who is the marginal buyer. Have a look at the number of YouTube subscribers over time. In general, there's a lot of new investors coming in when prices are rising, when prices are close to all-time highs. When interest is very low, when there's very few people entering the space, then there's nobody to buy. And then people simply take the profit that they have. The long-term holders are realizing their 3x returns, roughly. They continue selling, they continue realizing their gains. And when there are no new people entering the space, what should stabilize the price? Have a look at this aggregated chart of the YouTube subscribers. When the number of subscribers doubled, that was also when the price of Bitcoin roughly doubled. Of course, with a lot of volatility. But we have to see quick growth again. We have to see long-term holders getting into the asset again. Because it's usually those long-term holders that also decide when a bottom is in. It's investors with a long-term time horizon that buy in independent of the short-term price action, that just want to keep holding Bitcoin over the long term. The attention when Bitcoin is at low levels tends to be low. Why does the price still turn around? It's because long-term holders are net buyers during that time. Here, have a look at this. Bitcoin was at 16K, at 20K. We had mainly buying of long-term holders during that time. And so that's a big problem. We need to see the big whales getting optimistic again. Let's hope they're all market timing. Let's hope they don't make comparisons like this relative to the Nasdaq, because then we're very likely going to turn around again when we hit the realized price, or at least the long-term holder realized price. Of course, subject to risk assets in general expanding in valuation again, right? If suddenly technology stocks drop and the AI bubble bursts and we get into a global recession, then of course all bets are off and we don't know where the real bottom is. But if things continue the way they are and the market continues to happily expand, then 37K in Bitcoin should be very cheap. It should be a fire sale price. Now, I'm not talking about this too often on this channel, but I actually have a traditional finance background. So I've studied investment management and financial analysis in Hong Kong. And so I do think it's very important not to be just hyper-focused on crypto. It's very important to be diversified across different asset classes as well. Asset classes that aren't so much correlated with crypto. So even if crypto goes down, then we want to own assets that don't go down, that might even benefit during a crisis. The issue is that stocks are also historically very high. The price to earnings ratio of the S&P 500 is currently at 40. So that implies a real return of 2.5% per annum, less than the risk-free rate right now. This, by the way, this was the dot-com crisis and this was the global financial crisis. Bitcoin was created over here. The problem is is that gold, relative to the money supply, is also quite high. It has only been higher at the end of the 1970s. And we are above the historical average. That's the dotted line. And so this is where this channel is different to other crypto channels. I try to look at the picture holistically. And if you want to dive deeper, I have made many tutorial videos on not just crypto, but on how to do proper risk management and how to do proper asset protection and how to diversify across asset classes and how to optimize long-term risk to reward. This here is a monthly chart of my net worth. And during that time, we did have two massive bear markets in crypto. But if we rebalance our portfolio properly, then we can still make constant outperformance. That's the whole idea. And so if you're in it for the long term, right? If you don't just want to make the moonshot bets that might or might not pay out, if you're actually into wealth building long term, then the premium membership might be for you. A link to premium pops up here on the screen. Looking very much forward to seeing you there as well. Thanks for watching and see you next time. Cheers.